How's it going? It's Rocky. Welcome to weeks number 34 and 35 of our trading journey in the year 2024. We will have two main topics today. The first topic is our progress on the funded accounts with Apex. And the second topic, which is a lot longer, is really I want to share the habits that I've developed to help me become a more consistent trader. And hopefully this will inspire you to pretty much start some habits as well that will help you become a profitable trader. But before we get started, just a quick disclaimer. This is for informational and entertainment purposes only and should not be relied upon as a basis for investment decisions. So the first topic here is just how we're doing on our performance account. So what I'm showing here is the PA charts for my two funded accounts with ATF, which is Apex Trader Funding. When we look at this chart here, this is the zero line. And as you can see from my progress here, I've been more or less pretty consistent. I've had two red days. A red day here about negative $70. And then I had a mess up here last week Friday on day 21. And on that day, it was closer to negative $400, so I lost my discipline there. But what I do want to focus on is the fact that on the top here, I was pretty profitable and consistent with my profits. So right now, I'm trading micros until I hit the static drawdown. And then from there, hopefully, I can scale up on the number of micros I'm trading or go back to E-mini. With our journey right now, you can see here, it says day 26, but in reality I've only traded a total of 25 days as is shown right here. And the reason for that is I did have one day here on day 13 and our PL there was 0 because I was not able to trade on that day. So right now with those two accounts, P&L is about $722 and $723. We need to get to a profit of $1,600 before we are able to request a withdrawal, and the hope is that we have a bit more buffer before I can make that withdrawal. So hopefully this chart shows you how I've changed the past year with my consistency. I've been doing quite well with it, so please follow me on my daily updates. I put those on the YouTube community, and of course I still have my kryptonite here, these bad red days that could take out really the progress for weeks, and that's something that I'm working on and I am hoping to improve on. But stick around to the next topic because I want to share some habits that I do and pretty much practice every day before executing any trades, and hopefully some of these could be helpful to you if you are hitting a bit of a slump, because I know lately the market has been so volatile, and looking online I've seen a lot of traders that are really struggling with this, and hopefully what I share here could be of some help to you. Hey everyone, so it's Friday, August 30th. It's about 9:52 a.m. In the Pacific Coast. The US market opens at 6:30 in the morning, which is when most people like to trade. But for me, I don't do well in that volatility, and I'll show you that in a little bit. And I normally wake up around 8 a.m. and then I'm usually online at 9 a.m. Today is a little later, so I'm just logging in. And as I mentioned, I want to be able to show you what my morning habits are before actually executing a trade. So what we have up here is Thinkorswim. So this is what I use to do my analysis. This is where I used to trade my self-funded account when my account had about $50,000. But things have changed, so I had to switch to prop firms and trading on NinjaTrader. But I really like Thinkorswim, been using it for over 5 years and I'm more used to it, so I'm sticking with this with my analysis. On the left side here, what you see is a time-based chart where each candlestick represents 5 minutes, and on the right side is a tick-based chart where each other candlestick represents 512 trades. So next I want to pretty much explain what I look at when I get started. What I first do is, as you can see based on the bottom here, you can see how the volume is lower on this side, and that's usually during the Globex, and then you can see the spike up here when the US opens. And if you look at the tick base, you can look at the volume. They're pretty much all the same because it's a candlestick is for every 512 trades. So we're gonna zoom in, and I'm just gonna zoom in for since the close from the previous day. So I draw this yellow line to show me where the previous close was in the previous day. So at the end of the US market, there's a value that the futures close at, and I draw that in. So for today, I have a reference of how the market is pretty much doing. As you can see, during the Globex, which is the Asia and EU hours, most of it has been up, and today was an important day. So it was a PCE days, and I'll go through some websites I look at to be aware of that. And it was pretty much, spiking up a lot and then down, and then today, not quite sure which direction I'm going through yet. But the reason I'm showing this is this. So I'm going to zoom into the US market. And what we're going to do here is I am going to draw a range arrow just so you can look at this number. So up here is the range for each candlestick. So I want you to look at that number as I show you what I'm trying to point out. So right when the US opened right here at 6:30, you can see that range. That's at 132 points. Okay, that's pretty good if you do well in that environment. I don't. And then some of these candlesticks here, 59 points, another 121 points, and then another 101 points. So that's just the first 25 minutes of the US Open. And that is one of the reasons that most people like to trade the beginning, because they can be done within 30 minutes and move on, right? And either go back to their 9 to 5 and things of that nature. But for me, I don't excel in that. That's why I don't trade in that environment. I'm better off when it's closer to the average of the candle ranges, which is closer to maybe 30 to 50 points. That's when I can handle it. And the other exercise or habit that I do is I look at these movements, and pretty much, for example, I'm gonna draw a vertical line on where I would have entered on a trade. So I'll draw it here on the time base. Let's say, this is hindsight trading, but let's say we would have gone short here at 8:15. And I'm going to zoom in on the tick base on the right side, and just based off of that candle, I'm also going to draw, all right, where would have I shorted ideally, right? And let's say I would have shorted right here. And that actually aligns on the 8:15 candle as well. And what I do next is, of course, I don't do the markings, right? I just do this a quick check. What I do is all right, I look at the four signals that I look at when I enter to see if they correspond to the rules that I normally use when I trade. And if you look here, stochastic RSI and the time base, it's on the oversold, which is when I like to short, which is good. And then on the MACD, had crossed over, starting to diverge. That's correct. And then on the tick base, again, it was there, oversold on the stochastic RSI, and on the MACD starting to diverge. So I'm doing this just to see, all right, is my rules still going to work in this environment? And this proved it to me. And I do it on multiple candles just to verify, because sometimes the tick base is more ahead than the time base. Sometimes it's the other way around. It's really something that you'll be able to figure it out once you start trading a whole lot more. So that's what we're looking for on the 5-minute chart and the tick base chart. And then another thing that I look at, since I do have 3 screens, hopefully someday I can afford an ultra wide screen. That's my main goal. Another chart that I look at is the 1-hour chart. So this is a 1-hour chart from the past 180 days. Each candlestick represents 1 hour. I pretty much zoom in normally from the week, but sometimes I zoom out a little just to have a reference point of, all right, what is the overall trend like? So that's something I look at from the 1 hour charts. And then another one that I look at also is the day chart. So what I'm showing here is the last 5 years or so. You can see this dip right here. This was during the COVID dip. And then I have some blue lines here, just some important levels. And then I zoom in to pretty much closer to today, just to have an idea, right? like how many green days in a row has the Dow Jones Industrial have had already, or things of that nature. So each candlestick here represents 1 hour. So that's what I do with all my analysis. I go through that when I first open my chart. And the next one I do is I go on Chrome, which is what I use for when browsing, and I go to a Market Watch website. And on the Market Watch website, these are important dates that you should be aware of as a trader. For example, today, Friday, August 30th, the important one that I was aware of is the PCE index. So I knew that I didn't want to trade anywhere close to when that is released, because that is an important gauge for the Feds that determines, what they're going to do with the interest rate. And it's at 5:30 in the morning my time anyway, so it's really not a problem for me to not be able to, to be avoiding that time. So I look at this economic calendar, really important. And then another one that I look at is I do a quick peek pretty much on CNBC. So just on CNBC, just want to see if there's any big articles that I should be aware of during the day. So those are the two things that I look at. And then next, I'm going to show you where I do my actual trading, which is on NinjaTrader. What I'm showing here is my setup on NinjaTrader. I've shown this in other videos, but I'll just do a quick overview on what's going on here. What you see in the upper left are the accounts that I'm trading. You can see here I have my live account and I have my 2 PAs. And also I have my other evals that I am currently trading. And then next you'll be able to see here's the chart, and then this is the super DOM, and here is the basic entry and exit. So how I use this is the first thing, really important because I've made this mistake before. I've color coded the screens, so you see this green right here, another green up here and here. So in theory they're linked. Sometimes it doesn't quite work, but the reason I do that is I want to make sure that they're all in the same instrument. So for example, on all these three, they are all trading the MYM. So even though the green lights are there, I again look at the instrument just to verify, right? Are they all on the MYM? Because you don't want to confuse yourself on that. So I am trading the micros. And another thing I look at is the quantity. So right now, based on the candlestick I was looking, I decided I am going to trade with just 2 micros when I enter. So when the opportunity is there, of course, I will scale up. And as much as possible, I don't want to DCA unless my rule says that that's usually my buy entry, right? Because it gets tricky with the Apex rules, and as much as possible, I want to avoid DCA, especially right now. When you read the PA rules, it says there that you're allowed up to 1 DCA, or when your signals are there, you're allowed to take that, as long as you are not, that's not your main way of trading where you keep DCAing, which I don't do that. I used to in the past. We all go through that phase when you're starting to trade, but that's something I do not do. And then the next thing that I want to show you is the actual trade copier. So I will bring up the trade copier here. So this is the trade copier. I'll run through this if you haven't seen it before. You can see that my lead account is my self-funded live account, and the instrument that I'm trading is the MYM. And as you can see, I do have 2 PAs here, PA 44 and 45. I'm pretty transparent on where I'm at in my journey. And the ratio on this is 1. So what that means is if I trade 2 micros on my live account, PA 44 and 45 will also trade 2 micros. Then next are some evaluation that I'm going through right now. They do have a 1-day pass, but the main reason I'm pushing for this is they have a promo where the activation fee is $85. So that's more economical and something that makes more sense really as far as cost goes. And you can see here the cross is on. What does that mean? What that means is each of these evaluations account is trading the YM. And you may ask, why are you trading the YM on the evaluation accounts? Well, it's just psychologically, it's just something that helps me. On the self-funded and the PA, they're pretty small. They're actual real money from my perspective. especially the self-funded account, right? So that's why I'm being careful with those and trading with the micros. And the evaluation accounts, I'm just doing e-mini on those because my main goal is to get it passed and have them turn into PA. And also, it's also giving me confidence if I can go back to trading the e-mini in the future. So that's just something that I am doing. And on the ratio here, you can see it's 0.5. What does that mean? Since I'm trading 2, so let me draw this. So from the live, I do 2 micros. So in here, it's also 2 because 2 times 1. And then the next one is 0.5. So what that means is for each of these evals, 2 times 0.5, I'm trading 1 e-mini each. So this is pretty powerful. This is how I manage my risk. Some people like to split it up, trading 5 at a time, 2 at a time, 3 at a time. I personally want to think of it as if I'm trading only one account because I don't need that extra stress. It's already stressful enough as it is. So I focus on my live account, and I just happen to leverage it with these other accounts in the background, right? So I try not to think about them. I just focus on my live account. And if I happen to do well, hey, look, then you can leverage multiple times how many accounts you have on your performance, right? But that's also a double-edged sword because if I go negative on my self-funded account, then that will also compound. Hopefully this gives you an idea on what it takes to be consistent and be a better trader. Definitely develop your own habits, and I wish you luck on your trading, and hopefully this was helpful. Give me some feedback as I try to grow my channel to provide great content to everybody.